Hello traders, this is Brian from FinancialTradingJournal.com and welcome back to this week's FX Weekly Analysis. Today is Saturday, August 31st, 2013. So I hope you all enjoyed a month off in August. I hope you guys went on vacation, had some downtime to relax, because we are going to start getting back into the groove now that September and October are starting to roll around, which is earnings season for stocks. So that's always volatile for Forex as well, because based on how individual companies do in their respective countries, that country's currency will do well or bad depending on how those companies do. I apologize for the late release of this video. I'm currently recording. It's 2 p.m. right now. I woke up late, just getting back into the groove, considering this is the first FX Weekly analysis in 4 weeks. Since the past 4 weeks I didn't have any. And also, I'm not even at home right now. I'm recording from the cottage. I'm just away. And technically, it's not even done yet. The holidays aren't done because we have Labor Day weekend. For those of you in North America, we have a long weekend. So I'm still relaxing, getting back in the groove. I did trade. For those of you that attended the beta launch of my service this past week, you'll know that I traded cable. I shorted pound dollar up at 1.57. I made about 200-ish pips on that one. I'll talk about that when we get into the actual analysis. So I mean, normally I don't trade during August, but there was an exception this time. I figured pound dollar was good for a 100 to 200 pip move. If you see a move like that, you're not likely going to skip over it. You'll just take it for the sake of taking it. So I did trade that, but we're getting back in the groove. For the most part, though, as you'll see in the FX Weekly analysis, the entire month of August was pretty much slow. We had about I'd say about 50 to 100 pip movement on average, and depending on the pair, we went up to 150 to 200 pips for the entire month. Normally, you on a good month like September, October, we'll probably see that on a weekly basis rather than a monthly basis. So that's why I consider it a slow month. So anyways, let's get started on the FX Weekly analysis. First up, we have the dollar CAD as usual. Monthly chart. So as you can see, we had a green month close, so that's pretty good. There's nothing else to say there. We are currently in an upward channel, so I just drew these magenta lines. You'll notice the lines aren't all the same, because as I mentioned, I'm not at home right now, so these charts I made from scratch. The lines are from scratch. Some of the levels, I basically just watched the old videos and I put on some of the old lines, but you'll notice most of the lines are new. So we're on an upward channel right now. Did nothing to say there. I mean, the targets are the magenta line. This is the 6-7 level, and the black line, which is from the highs there, that's at the 8-5 level. So those are two targets going upwards, which is also in line with the upper bound of this upward trend line. If we do go down, we have the weekly trend line at support as well. But for the most part, targets are up there. On the weekly chart, what I have drawn is a fib line, which is drawn from this high to this low for possible extension levels. I just drew this for the sake of lining them up with the levels I drew previously. So you'll notice the 127 level up here at 1.07 is close to my magenta line, and you'll notice the 161.8 fib level is at the 1.08 level, which is near my black line. So those two are pretty much near my projected levels. So that's where we're going to go if the fib does extend. If the price action breaks the current high we have is 1.061. If we break that, then those are the two upcoming levels to target in the coming weeks. September is going to be volatile, as I mentioned, so those are two possible targets up there. And as I mentioned, if we go down, we have the support down here on this magenta line. Also, on the daily chart, what we have is support on this trend line as well. So this is a short-term trend line for support. If we break that, then we have the magenta trend line for support down there. That's pretty much all I have for the daily chart. 4-hour chart, what I have drawn is this level here. This is support, so I'm just going to zoom out briefly. This is the low from previous highs there, and these are the highs of the recent price action in July and June and parts of August. So this area right here is support. So in addition to the support of the aqua trend line and the magenta trend line, we also have this big block here. This big block is empty space, so if price does retrace down to here, we have support going into it, As you notice, we bounced off of this towards the end of August. This was August 27th, so we did bounce recently off of that. Going upwards, as I mentioned, we're targeting the magenta at the 1.06 area, and the black line, which is up at the 1.08 area. So both are 127 fib extensions and 161.8 fib extension levels. So that's all I have for the dollar CAD. Up next, we have the Aussie dollar. Aussie dollar, as you'll notice on the monthly chart, we didn't move that much compared to last month's close, which was at 89795. This month's close was at 88992, so that's about an 80 pip move. So this whole month, in terms of closes, we only moved 80 pips down. But you did notice that we did move up, so we did try to bounce. So overall, on the monthly chart, August, as I mentioned, is a slow month. So we didn't really move that much. If you include the high, then I guess we moved a total of about 300 pips. But in terms of actual closes, we didn't close down that much lower. As you'll notice on the weekly chart, what we have is, if you count the past 4 weeks that I haven't been doing FX weekly analysis, 1, 2, 3, 4, the fifth candle before that, we did close at the same level, and then within the past 4 weeks, we went up, and then we went right back down, and we're back at where we started 4 weeks ago. So currently, we're at this level, the 88992 level. Currently, if it breaks this level, then we're targeting down there. That's the long-term target. That's about 1,000 pips down. If we don't break it and we bounce, then we have this target as a short-term up target. This is at the 9.6 level, so that's possibly that's a 700 pip move or a 1,000 pip move down. So either one, possible movements depending on if this current level breaks or not. As far as the daily chart goes, there's not much. I just drew these trend lines here. That's all we have for the past month because there's nothing to draw on there. I tried connecting these highs to these highs, didn't work. I tried connecting the highs here to the low here, that didn't work either. These were the only trend lines I could try to fit into here that are still effective. So possible targets, if this level holds, is up here. If that acts as resistance, then we'll go back down and hopefully break it and target the lower levels down there. As far as the 4-hour chart goes, as I mentioned, this is the current level that we're watching. So we have this yellow block right here as support. So if this level breaks, then we're targeting down there. Otherwise, if this holds, then we're bouncing up to that aqua trend line as the first target, and then beyond that we have the upper target up at 9.6. So that's all I have for the Aussie dollar. Up next we have the euro dollar. As you'll notice on the monthly chart, currently we have a pin bar, which is relatively good comparatively speaking in terms of we're in the upper portion of the past few months price action, and we have a pin bar near the top. So that's pretty good on a monthly chart. However, the thing to note is on a weekly chart, this is what we have. We have this old trend line that I have drawn from before. This was a descending triangle. But what you notice here is that this downward trend line, price currently, it broke out throughout the month of August and currently now retraced back to test the same trend line. So now the question is, do we bounce from this trend line or do we go down and continue or effectively re-enter the previous descending triangle formation and continue downwards? If we do re-enter, targets are down at 1.28. If we break that, then we're continuing down to the 1.22 level. Overall, though, we had a pretty good week in terms of this week was an engulfing candle, so we engulfed the previous green candle, so that's pretty good in terms of price action. So there's a huge downward movement for those of you that were trading this week. Probably in the past 3 days, I think, as we'll go to the daily chart to see. In the past 3 days, we made some significant moves. I was watching it earlier this week at the 339 level. I traded it down to 334, so I only took 50 pips. I didn't think we were going to break down because, as you notice, for the past few weeks, we've pretty much been up here in this region only. We didn't really break down to here. With the exception of that movement there, we pretty much stayed up here, so I didn't think we would get down here. But we did. We broke down, so I exited a little early, but that's fine. I took 50 pips off there. But as far as the daily chart goes, we are currently above support. For those of you that have been trading, for the month of August and part of July, the 1.32 level is a big support wall. I call this a big block for those of you that participated in the beta. This is what I consider a big wall because we have this block right here that acted as support for the past month. The support goes as low as the 317 level, 316, depending on how far you want to stretch it. But the stops are around 315, so below that it's for sure going down. But 317, that stopped it this week, or actually yesterday for that matter. And it bounced. Currently we bounce off of this block, and we have a pin bar at the bottom. So even though on a weekly and a monthly chart we have the pin bars, we have the engulfing candles, on a short-term time frame we still closed above the block. So we have support holding short-term. Long-term might be going down, but short-term we could bounce again before going back down in the coming weeks. So if we do bounce in the short term, we're targeting the 3-4 level or 3-4-5 level, possibly maybe even the 3-5 level as the high, and then go back down. So those are possible targets, but for the most part I just want to talk about this support block that it's holding for now in the short term. On the 4-hour chart, there's similar things to the daily chart. We have this pin bar on the 4-hour candle, and then we bounce on the green candle towards a close on Friday. So that's pretty good for bulls. Short term, as I mentioned, we could have a bounce. Possible first target would be here at the 3-3 level, because you notice these were the lows. As I mentioned previously, I only traded this part. I didn't think it would actually break down. I only traded up to here-ish, and then broke down. So 3-3 is the first target, 3-4 second target, and then 3-4-5 another target, and 3-5 possibly as an extension target. So that's all I have for the euro dollar. Lastly, we have the pound dollar, which is the pair that I traded, which I got about 200 pips, 225 pips ish. Entered around 5.7, and I exited. I think my average exit price was around 5.475, so about 225 pips, around that neighborhood. I didn't get the low. The low was 5.430. That was during Carney's meeting when he made his announcement. I didn't exit during that. We were watching that during the beta launch, but I didn't exit down there. I exited somewhere above that area. But anyways, on the monthly chart, as you can see, I have these new lines drawn. Previously, I think what I had drawn was a upward channel to look like a flag. So I had the flag pole, and the upward channel was a flag. But no, I don't have that anymore. Right now, what I have drawn is a downward channel connecting the low here to the two previous highs there. A parallel line was created down here, connecting those two lows there. So right now, from the looks of it, if price continues, then it's going to go back down to there. But as we'll get to the 4-hour and daily chart, we have a support block similar to the euro dollar. As far as the weekly chart goes, weekly chart, we have this pin bar up there, and that's kind of where I entered, up at the top of the peak there. We have the pin bar. So on a weekly time frame compared to the monthly time frame, we are pretty good as far as we're starting to go down, because we have the pin bar forming in last week's candle, and we have the red bar continuation candle this week, although there's a wick on it, and it looks like it could potentially drop down. But we'll see what happens in the coming weeks. On the daily chart, what I'm about to show you is why I entered my trade, and then both on the 4-hour and the daily chart, I'll show you reasons for why I'm skeptical for a further drop, and kind of why I exited ahead of the big block support. So daily chart, first thing I want to draw your attention to is the aqua lines. What I have drawn here is a bearish Gartley, which is a butterfly formation. This is bearish, so it should be going down. I entered at the tip right here at 1.57, pretty much near the top. The high was, I believe, 1.5714. That was on the day of FOMC, so one of the great trading days are FOMC and NFP. So FOMC came out that day. I entered, I believe, around 1:30, 1:45, right before the release. We were all, I guess, the general market sentiment was it's going to go down because FOMC was the members of the committee were positive that tapering is going to start in September, or it's going to happen. It's going to happen. It's just a matter of when. But it was a positive reinforcement that it will happen. So markets reacted as such, and markets went down. So I entered near the top at the tip of the bearish Gartley. So long term speaking, bearish Gartley, I figured it's going to be good for a few hundred pips. Or if it goes all the way down, the target for bearish Gartleys are the bottom of the wing. So like right here, 1.51. So from 1.57 to 1.51, that's a 600 pip move, or down to here at the 1.48 level, which is a 900 pip move. So those were my potential targets. But we didn't clear this level yet, so I exited ahead of this level. I had intended to sell below this level if we broke below it, but that didn't happen. As you can notice on the daily chart, what we have is we have these long lower wicks on these daily candles, and this is a pin bar. If you look at it carefully, this candle right here has a long lower wick and a small body. That's a pin bar right at the support level. This yellow region is their big block support on the pound dollar, and those are reasons why I was hesitant to hold my trade. I exited about half position at first, and then I exited the other half when I noticed we started to bounce. So I exited the full position. Now I'm waiting to see what happens. If it closes below, I enter again. If it bounces up, then I'll enter short above in this region near where my original entry was, because we do have this magenta trend line here, the weekly trend line, and possible targets also will be drawn on the 4-hour chart. So on the 4-hour chart, so take note, we have the bearish Gartley on the daily chart, and we have this big block support on the daily chart. Now on the 4-hour chart, what we have is this upward channel. This upward channel is drawn from the lows here, and we're currently still inside of this upward channel, and this big block is right here. So this is empty space right here. So we bounce off of this channel line right here. I didn't notice this until today, but I coincided with the support, so that's fine. So currently what we have is, will price break this trend line? If it does break it, we still have support down here. Ultimately, you shouldn't pay that much attention to this 4-hour channel. The big question is this yellow block. The yellow block will be the pivot point for the coming weeks. Whether it breaks, it goes down, then price will continue down. If it bounces, then it's going to go up. Possible targets for the upside is the 100% fib, which is near the top at 1.57, which is also where the magenta line is. But also we have targets up here as well. The 127 fib extension is at the 1.58 level, and the 161 fib extension is at the 1.59 level. So those are possible targets up there for a further bounce, because if you extend this top trend line here, you extend it up, depending on how long it takes to get up there, you could see a projected movement. If we move upwards, we could get to either one of these levels. I mean, those are possible targets. If we hit this one, that's a magenta. If we hit up there, the 127 doesn't really look like a level because it doesn't coincide with the trend line, but the 161 is a possible level, and that's at the 1.59 level, which is near the 1.6 level. So those are possible targets up there if we do bounce up here, and that's why I was hesitant to hold my short. I mean, I could have held it, and it would have been fine because I would still be in profit right now. But I figured, why not just take 200 pips and then see what happens in the coming weeks. Plus, we have the long weekend coming up. So that's pretty much it for this week's FX Weekly Analysis. Today is Saturday. We have the long weekend if you're in North America. So on Monday, which is Labor Day, September 2nd, that's a holiday, so U.S. markets will be closed and Canadian markets will be closed. So that's just an FYI. It's going to be slow between 8 a.m. to 4 p.m. Eastern Time. So for those of you trading, Asia should be, I guess, relatively slow. I mean, it usually is on Sunday night. London, you might get some action there, but as soon as 8 a.m. rolls around, it's going to be slow because U.S. markets are closed. So that's just an FYI. Markets will most likely resume on Tuesday rather than Monday. So just keep that in mind for those of you in Europe or Asia. Take care for the weekend. Come back on Tuesday and start trading then. That's when I'll be back as well. So that's it for now. Until next week's FX Weekly Analysis, good luck trading and take care.